Hello, Mish, and happy Monday.
Yeah, some interesting market action as we're getting into a crazy week with tariffs and jobs report and more Fed speak. And of course, a very scary opening that turned out not to be such a scary closing.
Yeah, and I noticed that today's daily is about XRT. So I think we should dive into XRT, which has you can see it on my chart here, did not take out the swing low from a couple weeks ago and actually closed up on the day. So what do you make of that?
Well, I can never emphasize enough how important it is to watch this particular sector because it's the GDP 70% thing. Obviously, we cannot really expect much from an economy that doesn't have consumer participation. And what makes XRT so interesting is that it's 78 stocks in the basket, and it's got a really broad spectrum from staples to discretionary to online shopping. And we could talk about it, but also a lot of things that might be somewhat tariff protected, which is why it did so well. So that's from a fundamental standpoint. But from a technical standpoint, but it has started to break down in the beginning of 2025 as we were getting the end of January and into February. People were still talking extremely bullish about the overall market. S&P going to 7,000, all, Nvidia was getting upgrades to 250 and so on and so forth. And I'm looking at this chart and I'm saying something's not wrong. This is why I have the economic modern family. Something is not right about this market if Granny is starting to fail while everybody's still talking bullish. So what makes that significant today is that with new yearly lows that happened in the SPY and in the Qs and in the Russells, this actually did not, as you mentioned before, make new yearly lows, but it also flipped up. So naturally was that made me interested in writing about it. And then if you look at the leadership, it's
Yeah.
been a minute, but it actually looks like it's trying to outperform the SPY here. Not much to say about the momentum. I'm not all that excited about the momentum, but those two things, that it didn't take out the low and that it's outperforming the SPY, was enough to make me interested in at least talking about it in the daily as a relief rally, the bottom. I mean, these things are too soon to say, but certainly interesting.
Certainly demonstrates that there is stuff out there that people are buying. It's not everything's not just falling apart. So let's take a look at some of the stocks inside the XRT, um, and maybe look at how we would look at some of the ones that are doing well or better than not. Um, and what if we start with Carvana? Speaking of
Yes.
tariff protected potentially.
Yeah, so let's talk about this because last week when the auto tariffs were announced, Trump was very clear. Again, I think people make a mistake when they don't take him at face value. And he said he didn't really care if the prices of cars went up on new cars, and particularly foreign cars. So it just stands to reason that if people expecting higher car prices, that they would look to used cars or to places where you take care of existing cars because you may not turn them in so readily. And that's why O'Reilly, and we're going to look at a couple of others, did well today. But
Yeah,
Carvana's
O'Reilly's
been,
on
yeah, look
fire.
at O'Reilly. I mean, that's
Yeah.
just, yeah, new highs when in a market that's so beat up. And obviously, you can see anticipating since 2025 that we might get those car tariffs. Because again, this stock took Trump seriously and said, yeah, that's going to be good for our business. And there you go. But what's interesting, if we go back to Carvana,
Carvana.
yeah, this is a very volatile stock. I mean, this thing has made crazy moves in the past. So, it really started getting interesting. I mean, it's a relatively new issue, but it started getting interesting in 2024. And then, of course, at the beginning of 2025, it came down. And then had another great rally, which again was in anticipation. So this is not maybe the classic play of the used car market, but nonetheless, it did do very well. And if you look at chart formation, it's definitely in a better position than certainly the indices in a lot of the sectors.
Yeah, it hasn't taken out, it really didn't break down below its January low. It's pretty much held its 200 day. So I guess my question would be if we do get a positive phase change through that 50 day right up here in the blue, um, what do you think? Is that a phase change that you think you'd follow?
Well, we've talked a lot about when the phase change or the 50-day moving average is really intersecting with the 6-month calendar range high. We did a whole thing on that a while ago. And so now you have a situation where you'll get through the 50, but you got to get through the also the 6-month calendar range high, that horizontal green line. But
Yeah.
if you go back to the end of February, right at the beginning of March, those were the highs. So I might give it a little room, like to get over that 6-month calendar range. But if it does, the nice thing is because the 50-day moving is under it, you can use a pretty tight stop to let that to find out. Now it is outperforming the spies. You can see the momentum, not so great. We
Not
still,
good.
yeah, this has been the pickle, I think, for a lot of different things that may look good in the price, but they're hard to get excited about when the momentum is in such a bearish divergence as we're seeing here.
Yeah. Yeah. Just out of curiosity, let's take a look at O'Reilly because that probably um, has much better. Yeah, that's what you want your momentum to be looking like.
Exactly.
Right. And so when O'Reilly came through its 50 here, its momentum also broke out above its 50, and that's what you'd like to see.
Right, right.
Um,
So in the daily, so there's two things that I think retail responded to today positively. One obviously was in the used car space, and the other was in some of the consumer staples, like for example, Sprouts, supermarkets, Kroger's, those two. Even Costco came back as well. You're looking at Kroger. I mean,
yeah,
again,
here's Kroger. Look at
right.
this is just strong. People
It's
got to eat.
that people got to eat, and the price of eggs has been, of course, the big headline, but we know that that has nothing to do with inflation. But this right now, considering the grains went back down to lows, although they popped a little bit today, the supermarket chain, Kroger is its own brand, made in the USA, obviously is going to be dependent on consumers, but this is a good place to shop. We actually have it here in Santa Fe. It's called Smith's here that sells the Kroger's brand. And it's the best supermarket to go to if you're trying to save money but can still buy decent products. And that I think is reflecting in this particular stock right here. What would I do right here? Well, again, the momentum, even though it went too close to the highs, look at the momentum. The momentum didn't get up as high as it did the last time it was up here. So it could be telling us that it's got to do more momentum wise to keep going. Or it could mean that, this had its little run and the money might rotate somewhere else. I'm not excited about this stock, but it is interesting to show.
Yeah, I think it's indicative of what was driving the market today. And if we look at Albertsons too, it looks the same. It's this isn't like super exciting trader, but it's showing you where the money's flowing,
Exactly. And
right?
also look at Sprouts, SFM. Now, Sprouts did a little worse, but look at that. So here it's already over the 6-month calendar range high. And today it peeked its head out beyond the 50-day moving average. This might be an interesting buy if it clears the 50-day moving average again. This was something that actually was in our model, right? One of our models.
Yeah, it looks like it certainly would have been on the good run up.
Mm-hmm.
Um, yeah, momentum's questionable right here.
Same thing, bearish divergence. You got the 200 above the 50, where the price is the 50 above the 200.
Yeah.
Nonetheless, I mean, it is at least more interesting than everything else we've looked at so far.
Yeah, yeah. And with the momentum, if it breaks the 50 and starts to run, I would not buy it if I liked it, just because of the momentum, I would just be really quick to get out once it comes back down below the 50.
Probably under that 6-month calendar range
And I
high,
wonder what happened over here. This must have been earnings that
probably earnings. Yeah,
did
that would be
not
a good
live up to
bet.
expectations.
So, the interesting about, so the conclusion for me today is that yes, retail rallied, and I think we should go back to that chart. And partially because of the anticipation that used cars and car repairs are hot, that staples and food are still something people need. But does that really reflect the consumer coming back in a way that would make us feel like this market has bottomed? And I'm not saying yes or I'm not saying no. I think we need more evidence. So I wanted to go back to this chart because 70, if you look back at the August low, it was at 70. And then when it dipped down again, it never broke down under that 70. If you look back in September,
Yeah.
we had that massive consolidation that I was talking about in the breakout. So once we broke down under 70, if you look at March, early March, it was holding 70, finally
Yeah.
broke down, got back through 70, baked out a lot of people. People were very bullish when it got back over 70, then sold off. So now it has to get through 70. And if you look at the monthly chart, this is one of the sectors that broke down under the 23-month moving average. I don't know if you use 23-month and 80-month like I do. That's definitely not.
Yeah, this isn't the 23 month.
Yeah. But if you look at the
But
23-month, if you can, you check.
I could put the 23 month on really easily. I'll just change the 50 to 23.
That sounds good. That's actually one of my saved templates. And probably save the green one, the 50.
Make that 80.
Make that 80, yeah. Okay. Because I think it's important for people to see that with
Yeah.
retail, what you have now is you're under the 23-month, but the slope is still pretty positive. So if we get through 70 and we get through 72, it's like 71.50 to 72, which is where the 23-month is, then I would feel a whole lot better. And of course, you can see that this has not been below the 80-month for, my charts look a little different. Because for some reason, I don't know, put the yes.
Let me make sure I did make 23. I didn't put the adjustment. Whoops.
Yeah, so you have to put, okay, this looks a little bit more realistic here. Yeah, I like the way this looks. Because what I wanted to say about the 80-month is in 2022 and 2023, when we went through the rate hikes and then obviously the eventual stay pat that the Fed did with lowering in 2024, look how well that rode the 80-month moving average. And I really like to point these out because these make you sound like an economist. I've said this over and over. So right now we can say the consumer is in contraction, certainly not showing signs of recession, could easily come back if confidence comes back to the market for whatever reason that would be. Most likely it would be more admin policy, maybe tax cuts, who knows, if it gets back over that 23-month. And if it doesn't, when we start to look like we're breaking down under the 80-month, if that does happen, then we can say, you know what, that's a 6 to 8 year business cycle that we've been in positively since really the end of COVID in 2020. And now we're looking like we can be going into something more serious recessionary. So I think it's good to know where we are even in the business cycle. And what we can say right now is we're having a little bit of a contraction from our 2-year business cycle, but it's certainly not flashing horribleness that many people are predicting could happen. Nor is it necessarily telling us that today's action was anything more than a bounce until we get back over that 23-month. And of course, it's monthly, which means we would have to close out, well, March is closed. We're going to start a new bar next week. We would have to close out April above that.
Mm-hmm.
So it's interesting. We're going to start a second quarter, a new month, and a new way to assess our consumer area. And I think I cannot, as I said in the very beginning, I cannot emphasize enough that if you want to really keep it simple in terms of your analysis, keep your eyes on Granny.
Yeah. All right, I'm going to switch this back daily. While we're there, monthly, just to give some perspective, there's the SPY on those moving averages.
Exactly. The SPY is so far from the 23-month moving average. It's still so much stronger than,
Yeah, wow.
yeah,
I didn't expect it to be that far away from it.
yeah. SMH, I got close, put SMH up today. Look at that.
Oh, look at that, right down to it.
Yeah, went right down to it.
Yeah, that 200 level is it's a big level. I didn't realize that moving average was there too.
So again, not only retail, but if you're interested more in tech making a bounce, today would be the day for this to hold that area as we're going into a new month. Because if we start to break down under 200, it would really be hard to be bullish anything in the market, really.
Yeah, that is a big number. Let's look at XLY, not quite there yet.
Right.
Um, XLC, different tech, not even close. XLK, not, oh, XLK is close. I
Yeah.
wasn't expecting that.
Yeah. So there you go. So today was an interesting day, but not a decisive day.
No, but it's a definitely a more interesting area than I would have thought. If if I'm just looking at the cues, it doesn't really look like that interesting of an area.
Mm-hmm.
We're just still up in space.
Mm-hmm.
But you start looking at SMH and XLK, uh, in terms of the tech sector, Mags probably can't do this. Yeah, Mags can't do that.
Right.
Um, Interesting support levels, or let's say inflection levels. Um,
Exactly. So I guess this, really to summarize, the retail sector could be flashing some good news, but right now it seems to be very tariff protection or defensive, as you said, specific. The semiconductors and the tech got right down to massive support here. And if they hold great along with Granny, then maybe we have something more interesting as we're going into the second quarter. And if they don't hold, if Granny can't get back through that 23-month and SMH and XLK wind up breaking down under those 23 months, then we're in for more pain in the second quarter. And that's about as simple as I can put it.
yeah, yeah,
You got your RSP up there.
yeah. I was changing my moving averages. I don't know why it does that. Yeah. All right.
Yeah, look at
Keep an
that.
eye on XRT
And SMH, both.
and SMH for sure.
Right.
Yeah.
And then I think you'll have a lot more confidence in either staying out, going short, or going long.
Sounds good.
All right.
All right. We'll see what happens on big old Liberation Day on Wednesday.
Liberation Day. Yes, Liberation Day.
Yes.
All right. Well,
Go,
thanks.
Granny.
Go Granny, right? Go to the mall.
All right. That's good for now. I'll see you later.
All right. Thanks, everyone.